welcome back, everybody. I'm John, and I'm here with Jess from GexProfile. And
What's up, guys?
we're back after a long hiatus from
Yeah, it's
making
been a
videos.
minute. It's been
Yeah,
a hot minute. It's been a busy fucking, I don't even know how many months.
yeah. We've been making a lot of changes to the platform, but it's been a while since we actually put a video together, and we actually want to do something a little bit different this time because we have a few videos out there about what exactly our tools are saying, but we've never actually made a video on execution. And part of the reason for that is because um, the tools are saying so many different things, and there's so many different ways to use them, and we've seen a lot of subscribers use them in amazingly different ways. But at the same time, the idea here is that maybe you guys can get some inspiration from the way that Jess has been using the Gex profile, because it can be helpful also to see what somebody else sees. So so yeah, thanks Jess for like coming up with. I think we have two examples today that we're going to go through.
Yeah. Um, it's gonna be great.
So we're kind of assuming some knowledge of the platform, but I'm going to give just like a really quick overview, which is that what GexBot is doing is measuring the imbalance between we're classifying options trades and measuring the imbalance between buys and sells. And then if we end up with a node that is imbalanced, whether it's to the buy side or the sell side, we're gonna uh, we're going to see whether there are more puts on that side or more calls on that side that are imbalanced, and then we're going to find the gamma of that position. And the idea is relatively simple. It's just that if there are holders so far that day of those positions, that that those holders are going to be incentivized to hedge or exit their positions if they end up being at the money. So we end up being able to see where these inflection points are in the market, and so that gives us a nice understanding of a distribution, a bird's eye view of where the major option holders, option sellers are positioned. Um, so that's as far as I'm going to go into that. But yeah,
Uh, yeah, I mean, like, we're doing there's like a bunch of math internally, right? And like, I don't know if this is best to say, but like, for execution, I'm just thinking about like, okay, if it's a red bar, or like if there's a bunch of red bars, like this is where shorts are interested, and then like it's not even necessarily about whether it's put versus call. It's just about where the positioning is different or where it transitions, and then like marking those as pivots, or at least trying to minimize like where I had to put my stop, right? Because it's very similar to volume profile trading, where it's like you don't want to play in the middle of the distribution. You want to play on the edges. Um, and the Gex ladder is just a way of kind of marking that out. I I think these examples are very much because I'm gonna be talking about a trend day. Um, if you've been trading futures, like these are the days that people typically have trouble with. Um, I have trouble with them too, but I think it's a really classic um, example to walk through. We can talk about like the pre-market prep, getting an idea, making a plan, um, and then following that thesis. Um, but yeah, and this has also been like, at least for me, GexBot has been about trading pure delta or trading futures. I know people are generally trading, or they're selling premium with it, or they're doing a bunch of other stuff. But this is really kind of the original impetus for making the thing. And I feel like it's not as, you know, I'm not gonna say it's easy, but I think it's not as complicated as like it might seem. It's
hmm.
actually like at least the way that I look at it is pretty simple. Especially because like, with execution, simple is just is the only way to go. You got to keep it simple, like the more things you're adding, the more complicated you're making it, the harder it is to make decisions. And it's really decision fatigue that is like killer for trading. So anything
Yeah,
about reducing noise is really the goal, I feel like.
that makes a lot of sense. So then, before you had GexBot, I guess you were using mainly only, well, volume profile in combination with a lot of other things.
Yeah,
Um,
so I was like a big proponent of like, I read I read some Dalton Stadelmeyer like auction theory stuff. Was really into volume profile, really into like, you know, TPOs. There was that one video by Brannigan from Axia that I've watched so many times where he talks about like he's talking about order flow, right? So like the idea of absorption, of initiation. Um, it's the idea where when you're looking at like a volume profile, you're looking at like points on the distribution where you're going to start paying more attention to order flow. And so you're thinking,
mhm.
okay, well, like, is there a passive bid here? Um, is he taking it? Is there an aggressive seller? Is there no one there, right? Is it just kind of, is price just flaccid? And then making decisions based off of that.
And are those
Um,
points usually the edges or the high volume nodes?
yeah. So well, the idea is like, okay, oh, so for those who don't know, right? So volume profile is just taking the volume transacted at some price and then aggregating it across some time period. And this is a 30-day volume profile. You can use like a daily or weekly or monthly. And so basically what you're trying to look at is just uh, where have buyers and sellers interacted the most. Some people they filter by delta, like, okay, there are more buyers here, more sellers here. Um, but generally the idea is, okay, you have this hump, this distribution where this is where most people have transacted in the past. And this one, I think this is from June. This is a 30-day. Um, and then you have areas where there's not as much interest. Um, and so typically there's basically two kinds of trades with volume profile, where either you're looking for range bound trades where um, you're expecting the trade or price or spot price, sorry, excuse me, to range in these distributions. So you look to fade the edges. So you come to the top of this distribution, you're watching order flow, you're watching, you know, I used to watch Bookmap all the time. Uh, and then you're trying to see if someone's fading the edge of this distribution, and then you join them, and then you expect a return to value.
So
So
there's like an inductive process there where you're saying, hey, a lot of people have transacted here before, they're likely to transact here again, muck
mhm.
everything up, and then return us back to the center of the distribution.
Yeah, yeah, you're looking at, well, because you're looking at historically where people have done something, and you're like, okay, well, it's likely going to do it again, um, and so you're just trying to follow them, right? And then the other trade is like a trend trade where you're looking at value traversals or value breakouts, right? So you're looking at if you're at the edge of a distribution, maybe there's initiation occurring, um, and then we sell through, or we break out from this. So we leave this distribution and then we go searching elsewhere.
Hmm.
Those are the two main trades. Personally, I prefer the breakout ones. It's heavily dependent on like the regime though, just because, you know, uh, especially with like short vol and stuff, you tend to get a lot more range bound trades than you do like the really And when I say easier, I just mean that, you know, if you get these trend days across these low volume areas, price just moves much, much more quickly. Because there's less people willing to transact, and so people will tend to, or spot price tend to move a lot faster.
So those breakout trades, you're looking for those when we're sort of at the edge of one of the humps, kind of, to see
Mhm.
if we can kind of break through and then speed through a lower volume area. Is that right?
Yeah, and then you're looking for like the next volume node to hit.
Mm.
And also the reason, right? Like the reason you're looking for the edges of the distribution, it's primarily about like being able to set your stops in a way that you're not, well, that you're not fucking yourself, right? So like if you're looking for a range bound trade, then if you have the edges of your distribution defined, you can generally set your stop, you know, like you have a defined area to put your stop, such
Yeah.
that like if your thesis is wrong, you know, you're not like dumping, right? Whereas if you're trying to play in the middle of the distribution, it's a much harder to determine where you're, you know, of course there's like, you know, if people are scalping like real tight intraday ranges, it's a little bit different. Um, I
Yeah,
mean,
but
it's
we're
fractal, right?
looking for, I mean, you're looking for asymmetrical risk reward opportunities where you can set a reasonable stop, and if it goes, then it really goes.
Yeah, exactly. Um, but yeah, so okay, so that's volume profile, right? Now, in my opinion, at least, right? So you have like a historical map, like this is what happened, you know, a month, a week, or like yesterday, you know, these were the pivots. Um, Now the question is, okay, well, when we get to those areas, or if it's a new day, what is happening now, right? Like, how are you measuring um, what spot price is currently doing, and then trying to make a decision off that, right?
Yeah, because
Um,
there is like an issue with that inductive step of saying people have transacted here before, therefore they're going to do it again now, because all we really know is what they did in the past. So it's almost like we're missing information about the present in a way.
yeah, you know, and like things, you know, the market's non-stationary, right? Like it's always changing, and so like you have to monitor what's currently happening, right? Um, to hone your thesis effectively. And so I think, at least in my experience, there's like kind of two main ones, right? So there's the order flow one where you're looking at like footprint or the DOM, and you're waiting for us to come to a level, and you're watching you know, the bids and the asks and how people are getting filled, right? So you're looking for absorption. Absorption meaning like someone is aggressively hitting the ask, or a multitude of participants. Um, this has never really been clear, but you know, a multitude of participants are hitting some level, and there's some passive seller or buyer sitting there, right? So that's like the order flow way of measuring. Okay, like, you know, am I going to join this passive guy, or do I think this guy's going to get run over, right? Um, and the other way is where you're looking at the LOB. So you're looking at like bookmap. Um, you're looking at where people are placing orders along the ladder or the chain. Well, the ladder, excuse me. And you're trying to see where liquidity is, right? So like, okay, maybe we're at some level, but then people are opening limited orders down here, expecting to get filled. Then you're, you know, in your head, you're thinking, okay, well, the odds are that we're going to break out because everyone's kind of paying attention over here. So I feel like those are the two main ways. Um, but so my issue with, and I think they work, but at least for me personally, like footprints or like order flow was just always like, it is exhausting, you know. Like, I mean, of course, you have to be very diligent about waiting to reach some level and then really locking in and watching the tape. Um, but like I don't know why I actually took footprint off my charts like a couple months ago, And then I looked at it again recently, and I was like, "Fuck me, I like this is just a lot," you know. Um, Especially in trading where you're trying to reduce like the complexity. So like staring at like the bids and asking filled is pretty
Well,
eh,
there's this.
pretty strenuous.
Yeah, no, that just it gives me a thought, which is that it's very, very tempting to assume that because you're seeing more information, you have more of an edge
Yeah,
or you have a better edge. Whereas the reality is that you actually want to see as little information as possible, but you want to see the right information. Um, and if you're just looking at more in order to feel more secure, you're not actually more secure, right? Like,
yeah. Actually, I think that's a really good point. Maybe this is a little bit of a tangent, but like, because the thing about signal to noise, right? Especially with our like when we're classifying the orders, because I used to think, okay, well, if I'm looking, I want to find where all the big option orders are occurring,
mhm.
and that's going to tell me more, right? But in reality, like, it's not, right? Because it's not exactly that. It's the if we're just looking at orders that like fulfill, we can classify a very specific way, not like long and short, but we're classifying in a certain way. Then it's not about like it's not about the size of the order. It's about like who's actually affecting, um, who's being a little more pinpoint with their order.
Well, it's the accumulation of liquidity in real time,
Yeah, yeah. That's like actually
which
pushing
actually,
the needle.
yeah, which actually takes us nicely over to GexBot. So I
Mm,
guess,
mhm.
well, one point I want
Yeah,
to
we
make
finally talking about
is,
next spot.
yeah, well, when we're looking at GexBot, we're actually seeing, um, right, options-based levels, and those options-based levels, especially when we're looking at the gamma of those levels, which is sort of prioritizing 0, 1 DTE, um, you're seeing something that is an active commitment by somebody. For instance, if they sell a put, they're saying, hey, I'm willing to buy the underlying at this price. And so, when you compare that with something like LOB, where somebody could, uh, essentially, I mean, it's not necessarily spoofing, but they could submit an order and then take it out, right? There's no real commitment there. But with the option, there's an actual transaction there. And especially given the insane volumes of 0DTE options that we're seeing, um, we end up in this situation where, in a lot of cases, the best levels for futures come from the options world, um, because the options represent short-term, intense commitments with high leverage, which then either have to be hedged or taken off, or just have urgency to them, such that participants need to interact with those levels. Um, yeah,
Yeah, I
but
mean that was like the original. Sorry, go ahead.
no, I just wanted to say, I just wanted to go from there to, in light of all that, how do you read the Gex profile, um, in
Yeah.
comparison to volume profile?
So like TLDR, volume profile is just like my historical map. This is where people were, and then I'm looking at GexBot, where are people currently positioned, right? Um, and I want to know like it's very similar to looking at LOB, but I know that they actually put the risk down. Um, and I, you know, I still read like tape speed, but I prefer the bird's eye view of the ladder versus like footprint, just because it gives me a better, heads up of like where do we want to go, not just like what's happening where we are currently, but being able to have like a higher level view allows me to plan a little bit better. Um, yeah.
So in this particular example, when you're looking at GetSpot, what are you seeing and what are you thinking?
Yeah, so this was the 17th. Uh I want to say, this Wednesday, but it's probably meaningless for when this video releases. But okay, so this day, overnight had sold off. We had left weekly value entirely. By the open 9:30, we had already entered this upper distribution. This is from June, I believe. And so, at this point, I'm thinking, okay, well, we've broken out from value quite significantly. It's probably a good idea to start thinking about, trend day, right? I mean, every day is like, let's look for the trend day. Let's look for the easier trade of, joining the trend, and not doing anything dumb like trying to bottom ticket over and over. I say that because I do that. I have done that. I think everyone has done that at some point. But yeah, so I know historically this is what our distribution is, and then I'm looking at GexSpot and I'm looking at where everyone's currently positioned, right? And so, first to note, there's this call Gex at, I believe this is 3:30 on NQ. Now this was I believe this was prior weekly low, this level. So there's positioning there, right? But it's so, we are well underneath that level. Let me actually have a thing here. This is about 3:30, right? So this is this position. We opened underneath it. And you might think, okay, well, oh sure, overnight sold, and then maybe I'm gonna wait for like London close, or like maybe we're gonna revert back to this prior weekly low. But in this context, we've already opened in this distribution here. And so like, you're thinking about, okay, now I'm thinking about the edges of the distribution, right? Like maybe there's a breakout trade, but it's pretty unlikely considering how far that overnight sell-off had occurred. And then furthermore, like if you look at this positioning, right? Like this is just all everyone's angled down, whether these are like short puts, long puts, blah, blah, blah. Like the way I read it is just, the red bars, they're short positionings in some fashion. And like whether this is a short call or long call, it's just some sort of long positioning, right? But what matters is that we're in deep in this area, and so everyone's pointed down. And not only that, but like, so this is major, right? So I see this is at 101. This is right here,
Yeah.
right? So this is basically at the border of this very large June volume distribution. So I know
Yeah,
that
that's really
there's
cool.
someone either looking to like, okay, well, maybe they want to fade, this level. Maybe they want to get a breakout and enter this distribution. But regardless, like everyone's looking at this, or at least there's eyes on this level. And this already gives you, okay, well, if I can find a short entry, whether it's at the top of this distribution, whether it's at this lower HVE, I know I can at least look for a core, short to hit this level, and then maybe leave runners for if we actually accept into this distribution, right? And it's not just
Yeah.
this, right? So there's this large border here, and then there's still like there's just all this, and then there's another large bar here, which is at 20K, which is the HVN of this distribution right here.
That makes a lot of sense. Well, one of the ways that I um or one of the really classic things that I remember you telling me a lot is just that, and some other subscribers also telling me, is that one of the main things that they look for is, if we're in this red dominated area, don't look for longs. Like it's that simple, right?
Yeah.
And
Yeah.
that in that sense, like sometimes GexBot performs its function simply by saving them from trying to fade a trend day, because they know, even if I'm only scalping today, I don't want to look for longs here.
Oh yeah, dude, it saved me so many times. Like there have been so many cases where I'm like, oh, it's gonna break out. Like I'm gonna go long. I'm gonna enter this, super tight stop. I know we're gonna break out, right? And then like, GexSpot has some red bar above us, and like if I wasn't using that, like I'd be like, oh, my gut says we're gonna break out, and I'm gonna do something stupid, and then I get faded, right? So like it helps a lot. And not doing
Yeah,
trading is about not doing stupid things, less
no,
so about like doing the good things.
that's a really really good way to put it. And I also wanted to offer a slightly different way of, because you said, well, all those sort of bars, insofar as they're red, they're pointing down. The way that, I mean, when I look at this, the way that I read it is I'm saying, um, there are more so far today. There have been more puts opened, um, than calls in terms of like net
Yeah,
balance,
we're
which means
deep
that
in
regardless of whether they were sold or they were bought, the there's more leverage to the downside than there is to the upside, essentially, right? So um, if you think about it in terms of like a feedback loop, we're more likely to get into a feedback loop to the downside than we are to the upside. And as a
it. Yeah.
trader, like that's all we really need. If I know that the probability, like the distribution, is tilted downwards, then over time, if I take trades in light of that understanding, then I'm gonna do well so long as I manage my risk. Um,
Yeah, and it's really about like if not being a well, at least for me personally, it's about not being a contra, right? Like if everyone else is pointing some way, then I should just follow them. I mean, it's a little bit different, right? Because in this respect, this is not like just because it's a high volume that these bars are showing up. Like there's a reason that they're even showing up on GexSpot. But like in general, it's like just follow the other people. You know, uh, don't try to like be the contra. Probably not good enough for that, or it's
yeah,
harder, I should say.
so then in terms of, right, in terms of an entry here, like how are you thinking about that?
So generally, right? So like ideally, you find um either you're looking to join on the top of this distribution because then okay, well, like you can be pretty tight with risk. A super insane way would be like if we somehow came back to the prior weekly low at this this level, and then you just look to fade it. It's either that, or if we're in this distribution, then this is getting a little bit messy, but uh, we come down here, we have some reversion, and then typically, if you're looking for like continuation, right, you're looking for some sort of retrace to um, the edge of the quote unquote previous distribution. And by edge, I mean like, hold on, this is like, nope, that's not what I do. By edge, I mean this edge of this volume shoulder.
Mhm.
And then you're looking to join that for a short. Um,
And how are you using GexBot to look for an entry?
yeah, so my first example is actually doing the harder trade where you're trying to fade the trend, and then um so you can technically you can, right? Like obviously spot price or price never just goes in a straight line anywhere, even on like those real incredible trend days. There's always like we hit some pocket of liquidity, the real short time frame shorts close their positions, we bounce, we do some sort of retrace, whether it's like 10:30 or like London close or whatever. There's always usually some retrace. Um, and so in this case, right, um, actually, this kind of touches on a small point I wanted to make. Um, but no, so here we have major at 101.
Mhm.
And at this point, we've been selling, we've left this upper distribution here. And this is sort of, this is that, you know, from way earlier, this is the 101, the largest bar, right? Like that target um, for a short or a pivot or what have you, right? And so when we get here, you know, the way I think of it as majors being your highest convexity point, and it's simply just that, okay, if you were short, like if you had puts or something, and we slam into this level, this is probably a good spot to take your core off or something, and then maybe leave a runner, right? So you're very likely to get a bounce. And so in this case, if you're looking for that retrace, right, you're trying to, you know, ideally you just go long, or you look for the reversion at this level. And then when I'm thinking about where to go for the retrace, I'm looking for where does this distribution, like, is there a transition point,
Hmm.
right? So like,
Oh, that's really
okay,
cool. Yeah, to like up to
well,
170. Yeah.
yeah, so either there's like this transition point here. There's a bit
Hmm.
of a, I still think this is like a volume node kind of,
Yep.
and then I'm looking for and you know whether this works for either shorts or longs, right? So like if we're going up, if we're trending up, right, and it's all positive, or call Gex, call Gamma, and then we get a retrace off of major, then I'm looking for like a negative or put Gamma bar, right? And that's kind of the extent to which any sort of retrace would be.
Hmm.
Um, Now, this is still not, it's non-optimal, and not just because you're trying to fade a trend day or whatever. But what I find is that majors always work best for um, targets rather than like reversion
Yeah.
levels. I don't know why, but it's just my experience where, you know, if I'm long, right, and like we're about to hit major positive, then it's the odds for whatever reason are always better to be like trimming longs there rather than actively trying to short off that level. And I think it also has to do with like, you know, oftentimes if you're doing some value transition and you're heading to, let's say, another VPOC, um, or well, there's really multiple HVNs here, right? So like, you know, oftentimes or a lot of times majors align with these HVNs, or they function similarly where, yeah, sure, it's a good spot to take profit. But you don't really want to go for the bounce off it, because oftentimes like this is just this whole liquidity suck, right? So like if you enter off a long here, you don't have a defined, I mean, you know, you can set a stop. You don't have
Well,
a good place to put a
it's the
stop.
same thing as the volume profile that we were talking about before, where ideally you want to take trades that are going to take you through the low volume zones where you're going to kind of speed through and have a clear target, rather than taking a trade
Yes.
at a reversion zone where even if you get a couple points, you know, you're going to be in the middle of muck. So
You're gonna get chopped up.
it's
Yeah.
yeah, because then it just wears on your nerves, and unless you know, right? Because like you were saying, it's totally possible to take that trade off of major negative, so long as you know, hey, I'm only really looking for a scalp here, essentially. Um,
Yeah. I think that also kind of leans into where like I don't know why people really like the scalping. Or at least I think it, in my view, it seems to be really popular, even though I think that's quite literally the hardest way to trade, because you have to be so on the ball, and like, you know, because you cannot have any concept of the future when you're scalping, right? Because like you're just staying with literally what's happening now. And this is a long tangent, but you know,
yeah,
anyway,
let's move on to the example of how we would actually join the trend day, which is I think what most people kind of
yeah.
are interested in hearing.
But this is an example, or sorry, the ending. So if you were to fade off major, and then you're looking for this 171 targets, and then you know you get to this area, and then that's it, right? And like, you know, you can also see where there's it's like a transition point here, right?
So you're basically,
Like
it's kind of like you're
the
good
top of
to
that.
go until the green is done, and then you hit that bar of red, which you're reading as resistance.
Yeah. It's like I'm just looking where the positions are transitioning or they're flipped. Or it's just in a sense it's a pivot. So this is like, my max odds upside target in my head. Now, actually, this also ends up being so this is not actually the join example, but this is a good spot to try to join the trend, actually. Right, so you had this transition area, and now it's still not ideal, but it is at the edge of this distribution, this volume distribution, right? And
Hmm.
so the idea here is, okay, yeah, we had some retrace at this HVN here. And then when we come back up here, okay, do we accept back in this distribution or do we continue down? And then it's your choice. Of course, there's a whole context of like overnight and exceeding weekly values. So you're probably like, okay, well, this is a good spot where I expect us to um, not enter this distribution and then continue onward, right? And
Yeah.
we see this aligns on GexProfile. And so right here, right, if you want to join the trend, you can join the trend here, and then your target now becomes 76, which
Yeah,
is
because
like,
major negative has actually moved lower as we see options
yeah,
interest picking up below
yeah,
us. And that's
yeah.
one of the
This is
things that sorry, but like that I
mm,
find kind of that it's difficult about, conveying this information on Twitter or elsewhere. It's that because our charts are updating so dynamically according to the orders that are coming in, the levels are actually moving as other people's positioning is moving, which means that you could enter a short with an initial target at 101 or whatever it was, and then all of a sudden it gets extended because you see, oh, everybody's piling in. Like, I guess I'm just going to stay along for the ride. You know?
yeah. I think that kind of touches on like, people love market calls, but I just they just don't they just don't make sense to me because like it's literally, okay, maybe my view is we're about to bounce or something, and like, okay, maybe, and then maybe someone calls it or I call it out, but like in the literal next instant, like the tape could change, like, and that call is instantly stale, and I know that people love like those targets and stuff like that, but it's just kind of not how it works. Which I also think is what makes it so difficult to, well, it's not one that lends itself to teaching very well, just because there's so much of it that's like very, very, I don't know, like soft tissue. There's a lot of like not concrete things that are occurring,
Yeah,
non-stationary, I
but
guess.
I don't necessarily think that that's true here. I mean, like, for instance, like when we started off, you see that everything is put dominated, and you're saying, okay, well,
Mm,
I'm not gonna fade this, and then you're just looking for the highest, large value nodes or transition points for entries. Like, that's pretty simple, straightforward stuff that you've been explaining.
yeah. Oh yeah, yeah. I just mean in the context of like Twitter call outs, they're like,
Oh
okay, are we
yeah,
going
sure,
down more? Like, well,
sure.
I don't know, dude. Like, okay, it looks like we're going down, but maybe everyone changes their mind and like flips positive or something. Like, fuck me, dude. I don't know. Anyway, excuse me.
Yeah, you
Uh,
have to be watching it in the moment. Oh, okay, we have a third example, or is it the same
oh
one?
yeah, yeah. This is the actual. So this is not really. I mean, it's like technically a rejoin example where you're joining the trend.
Hmm.
Although that day we ended up just fucking ranging into the afternoon until like quite literally, I think it was like the last 8 minute where we finally got to the bottom, the actual bottom of this distribution.
Okay.
Um, but no, so here, okay, we've entered this volume area, and I'm marking like this, but technically there's three of them here, right? There's three HVNs.
Yeah.
Now what I'm thinking, okay, so there's sort of it's sort of a mix of two, but partly because of how the afternoon session here worked out. Um, so if you're looking for a trend rejoin, right? You're looking for this, there's this border here where it's all red. And then this is, I just think of them as longs. And then there's some guy sitting over here is like 130 or something. Yeah, around here. Now if you're looking for a rejoin of the trend, this is the pivot that you're looking to enter.
Hmm.
And then follow the shorts, right? And then maybe like this distribution kind of thins out over here, so maybe this is your core target around 20K, which aligns with the volume profile right here.
Mm.
So you either have that. Now in this time or this afternoon, like we end up just ranging quite a bit through here. So I know it's very tempting. You see this, right? And we're just bouncing off this. So the idea is, okay, well, maybe maybe I can bottom tick this, right? And like
Hmm.
maybe, you can give whatever reason you want where, okay, maybe we just do a full V reversal, right? If we can't break some level, then we're gonna go back up to this distribution, right? Up
Yeah.
here. Um, the issue with that, fortunately, I don't have an example on hand. Um, is if all of these, I'm just watching this positioning, right? And like if this just stays red, if no one's flipping, um, then the easier trade is to just stay with the shorts. And maybe like you end up you don't get like an amazing runner or anything. Uh, but the easier trade is just to fade this, right? Now technically, yes, you can be trying to get the longs off this node, this volume node. But you just don't, it's the much harder trade to do. It's also because you're really trying to kind of wait for the actual
Yeah,
bottom
well,
of the
well,
distribution,
it's
which
what we
can never get to.
covered before, right? Like if there's more leverage to the downside, then over the long term of many trades, trying to take those longs is not going to benefit you, whereas trying to take the shorts event like on occasion
Yeah,
will.
where you're
Um,
joining them. Yes, exactly. Um, Now the counterexample is when like someone actually, and I don't fully understand the mechanics of it, but for if I'm seeing like a single node or something here, someone's flipping positive, then the odds of like, okay, we're actually going to V or Wilson or W
hmm.
out of this, uh then maybe that's not only, I think it's still the harder trade, but there is a potential for like something crazy to occur. Um, I
Yeah,
think
there,
there's
there.
there's a
I
lot of
have
vulnerabilities here
plenty of
too, but
examples. Sorry, I have plenty of examples of that up on Twitter where we'll start to see
mhm.
call Gex building underneath, and it'll lead to sort of either, it'll lead to a massive reversal there. And I
Yeah,
think,
I don't. Sorry, go ahead.
yeah, so the dynamic is that if we get, an imbalance of calls building up underneath us, then especially with zero DTE as the day progresses, um, it becomes more and more likely that they're going to end up being in the money, which actually raises their delta. So it becomes a
Uh,
passive, positive flow on the market just because that position is there.
oh, because they're in
And
the
and I,
money.
mhm.
That's why.
Yeah. And that's especially reasonable with something like SPX, where we're looking at a lot of contracts that are being traded, and like a pretty high notional. With NDX, it's fewer contracts, but what's interesting is that what seems to happen is that players that are trading elsewhere are also selling premium on NDX. So then NDX positioning also becomes indicative of what's going on elsewhere,
Mhm.
and we end up with what you've been seeing, which is clearer signals on NDX, even though the options dynamics themselves may not be what's moving price, um, but it
They
doesn't
just
really
show up more
matter.
easily there.
Yeah,
Yeah.
yeah. Anyway, that's a little bit of a tangent. Should we go down
Oh,
to the last one?
oh,
Because we
this
should
was
probably wrap
just
up
like,
soon.
oh yeah, yeah, yeah. This was, I think this is what EOD 5. I should have a time some other. But this is basically the effect of like, okay, you're joining the trend, and then you're looking for oh yeah, this is that EOD sell off. That was pretty wild. But yeah, so you're joining this trend, and then you're just looking for thinner parts, and then you take
Mm.
core off at like 20K here, maybe
Yeah,
lazy
because
winner.
once we've got through all the largest parts of it, after that everything gets super thin, so the RR doesn't favor staying in something like that anymore.
Yeah, or like you just don't know,
Hmm.
you just don't know.
Yeah.
Yeah,
Wow,
and that's
that
it.
makes sense. Well, those are our, what was that? 3 examples, I think. 2, 3.
Yeah, it's just like a one day, you know.
Oh, I did want to go back to the first one, right? It's like, so because
Hmm.
were you able to join that downtrend like
I
towards the
took
beginning of the day?
like I only got to here, and then I managed to get a hold of this sell off here,
Yeah.
and then I closed around 101,
What
and then
what was that? But then that entry was around 223 basically, right? Which is like,
so I did what you generally don't. What I say not to do on NQ is where like there's a breakout trade here. Um, there's just something about, I don't know how to explain it, but I was just looking. It's just the feeling on the tape. But I managed to snag like there's like a creeping feeling to it. I think it was
mm,
around like 220. Oh yeah, I think it was 223. I don't know, somewhere around here. And then I just took it to major, and I was
oh,
like,
okay.
okay,
Okay, so in that case you used your feel on the tape for an entry, but then you
yeah,
used
which I
GexProfile for
don't
your exit.
recommend.
Yeah.
Yeah, basically. Um, and then I didn't actually come. I came back for like the very very end of this one.
Hmm.
I remember this actually because and I don't know if I should say this, but like so EOD here, there's this ramp occurring, right? And then like sometimes you can kind of get a sense of people are getting a little too excited about, oh, we're gonna do a full reversal. Um, but I managed to snag that last one there, and that was off of I think at this
Yeah.
point it was like
Yeah, I mean
64.
this is, you addressed this actually. Yeah. That makes a lot of sense.
Yeah, it was right around here
Um,
maybe.
since we're wrapping up,
Yeah.
would you mind moving over to, because we have that little, at least that screenshot of the Sierra deal as well, which,
Oh yeah.
just to show people too, um, that what this can look like when you have everything combined, which is kind of cool.
Yeah, when it's directly plotted. I know that like maybe I'm just stubborn or something. I just like the latter personally, but I know that, it's well actually for examples it's easier to look at like the actual time series chart, right? Like
Yeah, for
okay,
for 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 actually trading, I also think that well, because that's the thing, right? Like Xbot is designed for the visuals, it's designed for actually using it. Um, but
mm,
yeah, this is a nice example on Zero for sure.
but yeah, so
Um,
like, you can also directly see or like how it aligns with like our volume profile, right? Where like, okay, there's some max convexity here for shorts, and then if you're looking for the fade, right, you fade back to value, and whether that's like zero gamma, this is the classic view, whether it's zero gamma or leave a runner to pause, major positive, you know, um, and don't enter on zero gamma because they're
no,
you're gonna
yeah,
get
that's
chopped.
one of the main, that's another big Xbot contribution that goes in the direction of how not to screw yourself, which is don't enter at zero gamma. That's it.
And I know that like, yes, there oftentimes like there are versions that occur off zero gamma, but like more often than not, you just don't have a good place to set your stop, and you just end up getting either waiting forever or getting chopped up. So just stick to
Yeah.
the majors, right? And like fading the majors, like here, fading major positive.
Yeah. No,
Yeah,
that makes a lot of sense. Well, this was Jazz. This was great. Like, maybe a lot longer than we expected, a lot more in depth. But I think that,
really? Oh, shit.
um, yeah. But I think I think that that'll be helpful for people as well because then, um, at least just in terms of, I think honestly, if I had to summarize the main message from just reading the Gex profile, it's just we built it so that you don't have to overthink it. So that you just pay attention to it in the same way as you would with the volume profile. Pay attention to where the major nodes are, to where the profile is tapering off, to whether it's put dominated or call dominated, to simplify futures trading as much as possible. Is that fair?
Yeah, I think that's fair. Yeah. I think there's also a lot of like cooler little tidbits about using it. But I think those are probably for another video. Um, there's also like, I don't know, even for me, the more I've been using it, there's just like a bunch of little things that like crop up. But I think this idea of like sticking to just, okay, if it's red, like join the shorts, and then look for those transition points for entries, and that's it. Like don't try to, because there's plenty of stuff going on your charts already, I'm pretty sure. So keeping it simple is, for me, like I literally don't. I have a 10K tick chart for like my heads up view, and then for
Hmm.
execution I just have like a 1.5 or 2K tick chart, and like I don't have any levels on there. I just have a volume profile. Like
Yep.
I don't have any squiggly lines. Yeah,
Yeah.
but yeah,
Awesome.
thanks for having me on.
Oh yeah, of course. Well, I mean, yeah, if you guys have made it this far in the video, thanks for listening, and hopefully we'll be back with another one soon. I don't know, I have a few different ones planned, but hopefully this was helpful, and yeah, we'll see you again soon.